despite all the turbulence of the COVID-19 pandemic, becoming a homeowner has become more affordable and attainable. As the home buying trend continues, OOBA Home Loans Group latest statistics reveal that first-time home buyers are purchasing properties for 8.3% more than last year, right? But what are the minimum requirements to own property and barriers to this? Also, interest rates are expected to go up once more, so we could see the buying trend go down. So let's delve in this matter further with OOBA's regional sales manager, Natasha Champion. Natasha, thank you so much for your time this morning. I mean, certainly COVID-19 has stretched us in all forms and sorts, but the property industry as well has been affected. One would say that over the past few years, in fact, with even the harder lockdown, it was seen almost as a buyer's market. But talk to us a little bit about where things are standing when it comes to the property sector and the home buying sector.
So thanks, Faith. Yeah, I would echo the sentiment that, in fact, year on year, even in the first-time buyer space, the average purchase price has increased by 8%. So we put that down to kind of potentially outer-lying areas on the back of the work from home culture, where there is more bang for the buck and there is more value for the spending power, even in the first-time buyer space. You know, having said that, the interest rates are on an upward trajectory, various factors involved there. However, we are still far lower than we were pre-pandemic. We were at a 10% level. We're currently at 7.5%. So even if we have 1, 2, 3 MPC meetings that decide on an increase, we are still better off than we were in 2020.
Yeah, I mean, but it certainly says something about how there needs to be more education around the home buying space. Many people may even be intimidated by buying a home, whilst others, right, may still believe that renting would probably be the best bet. If you had to look at the markets right now, would the markets favor more renting, or would the markets actually favor somebody to be owning their own property?
You know, at OOBA, we empower people to own their own homes, and it is, as you correctly say, all down to education, information and empowerment. So if you took your average rental and you converted that into a home loan repayment, knowing that there are other incidentals as a homeowner and factoring those in responsibly, I think people would be pleasantly surprised if they went onto a resource like the OOBA website and actually run those numbers and cross-reference their rental with a bond repayment, and again, be pleasantly surprised at what that same amount can get you in terms of your home ownership dreams.
Yeah, but then let's talk to us a little bit about where the journey all starts for the individual. You know, I love conversations like this because we get into, delve into how exactly do you get to a point where you start owning your own home. And as I said, sometimes it can be, and it can come across as a little bit intimidating, especially for people that have never done this before. So take us through, Natasha. What do I need to know and what must I have in place in order for me to even start the journey of purchasing my new home?
You know, Faith, I love the way you've put that, because an empowered buyer is a stronger buyer. So what we need to establish are two things. And these are the cornerstones to a mortgage application, and they're likely to always be the cornerstones. Number one is your credit score. You need to understand what it is. So depending on the bureau, we're looking at a number of 600 and above. If your credit score is currently below 600, it means you're not buyer ready right now. It doesn't mean you'll never be buyer ready. We can then embark upon a credit rehab exercise with you. Number two is affordability. So you need to obviously qualify for those monthly repayments over a 20-year loan term. So once we understand our credit score and our affordability, we're in a better position to go to market and shop in our correct price range. There's nothing more heartbreaking than falling in love with a R1 million house when in fact your affordability might have you more at a 700K price point. So credit score and affordability are the two stalwarts of qualifying for a home loan in this country, and will likely always be.
Yeah, you know, Natasha, something that happened to me when I bought my house for the first time, one thing that was very pertinent was the not knowing the hidden costs and not knowing what actually comes into paying the price. I mean, I remember making this purchase and I thought after the bond got approved, that was it. Yay, we celebrate. I get to move in. Until I got a phone call saying, so listen, ma'am, within a week's time, we're going to need you to pay your transfer fees, your lawyer fees. And these are just these costs that you don't know about. Just talk us through exactly when do you pay transfer costs? When do you not pay your transfer costs? And how do those brackets actually work? Because as I said, for me, it caught me by surprise. Now I've got a little bit more experience in the game. But for the first time, when I bought my house for the first time, it was just a travesty because I needed to come up with the money in literally a week, and that could set somebody off, especially somebody who does not have any form of savings or was not anticipating it earlier.
Exactly that, Faith. And it goes back to buyer education and empowerment. So transfer duty is a tax payable to the government. The exemption is in line kind of just above the 1 million mark and below. So with the latest financial decisions being made, that has kind of come up in the buyer's favor, certainly in the first-time buyer and investor space. So you'd be exempt from transfer duty, which is the bulk of those costs, at the R1 million plus price point, kind of, and going below that. So in addition to that, you would pay the transfer fees, even if you're exempt from the duty, to the conveyancing attorneys, and also the bond registration costs, which is a fee that the bond attorneys would put into place. Again, you know, get organized, become empowered. You can download the OOBA app for free, and you can run all sorts of calculations on there so you know exactly what you're in for. It is on a sliding scale. It will be in relation to the purchase price and bond amount. So I can't give you an overriding figure. Play around with those figures. Take the time to understand your transaction. So indeed, as you say, there are no surprises.
Yeah. Another thing that also happens to home buyers is that they don't know what to look for in the house that they're buying. So sometimes there used to be an old term. I know that now since the new Property Act has come into effect, there's a different term for it. But remember, we used to use the term voetstoots, where you get to buy the house as is, so as it were. I know that term has since amended, but a lot of us don't know what to look for when we're buying a house, for example. Let's say it's not a new development, you're buying an existing property or an existing apartment. Those little nuggets that you would incur and the cost that you would incur in the long run if you're not able to point out. Talk to us about, if I'm not getting into a new development, if I'm getting into, let's say, an existing apartment, or I'm getting into an existing house, what must I look out for exactly? Because ultimately, once you've signed, you've signed.
Yeah, so the voetstoots clause, and it's interesting because I was actually with a conveyancing attorney not so long ago, and this came up in the conversation. The voetstoots clause is a part of the way we do business in South Africa. It's linked to Roman Dutch law, which is how we kind of operate, and that clause has not disappeared. However, it has been kind of not replaced, but it's been uplifted by the seller declaration form, which is now also a standard requirement. So the seller declaration form is the seller coming in and saying, yes, you are buying this house voetstoots. However, I put my hand up and say, there is damp. I've treated it. We are finding that the garage door is faulty. We will fix it. So they're taking more responsibility to try and alleviate the argument down the line about latent and patent defects. You know, what has transpired as a result of the problems currently in there. And that's just another barrier to protect both the seller and the buyer from kind of arguments down the line. Having said that, as a purchaser, to get an independent home inspection is always going to be money well spent. And it is an emerging profession. There are a lot of home inspectors out there. And I think as an investment aligned to your long-term property purchase, I always believe property is a long-term investment. Try and set aside the funds to make that home inspection independently, financed by the buyer, a possibility for you, because as I say, it is an investment aligned to the greater investment of the property itself. It's going to save frustration and potentially far greater costs down the line.